Happy Friday. Welcome to the Friday Elite Zoom training. Um, I'm really excited about a couple things today. One, Mutual of Omaha, which is one of our top carriers that we use, they just rolled out an increase in the death benefit for their IUL and Term Life Express products, and stoked about it because there were clients who were asking for more coverage than 300,000 and at an older age only goes up to 150. So they're like, oh, I want more. And this is going to allow us to serve our clients better, and it started on April 1st. So this is already effective. And the Mutual of Omaha Index Universal Life Express and Term Life Express, they go up to 550,000, almost double the original face amount maximum. And then that's between age 18 and 50. And this is a nice one too. Before, after 51, they will only give the client up to 150,000. Now it's tripled. So it's $450,000 between the age of 51 and 60, and between age 61 to 75, which to me, for clients that are older, but let's just say they have a good health, then I would recommend giving them like a IUL now, since the coverage amount goes higher, instead of maybe a final expense to do the equity protection plan. But only if they're healthy enough, right? If they have like heart attack, stroke, cancer before, then you go straight to that final expense policy to cover their mortgage payments. So I see that this is going to increase the usage of Mutual of Omaha. And then I'm going to talk about IUL today and some of the presentations. And I'm going to share the presentation so you can also use this for your future clients. So let's get started. This is called the tax-free wealth presentation. We tweaked some of the information that we had to make it better. And I want to share this so that you can utilize this slides. Okay. Now, when it comes to the life insurance, there's many different life insurance, right? There is a term, there's a whole life, there is an IUL, there's infinite banking, a variety of products. And clients want to have something that's not just going to protect the family temporarily, but something that also lasts a lifetime. When it comes to mortgage protection, I would say term is the best because we're trying to cover the big mortgage for the lowest cost. But what's amazing too is a lot of our products can be converted later into an IUL or a whole life, so the families don't lose the coverage after a certain period of time. Okay. And when it comes to the IUL presentation, there is coverage that lasts a lifetime. So if it's properly set up, coverage will last until they're 120 years old, which is incredible, right? And then secondly, IRS approved tax deferred and tax distribution. When it comes to the IRS tax code 7702, the money that you put into the cash value of the life insurance, as long as it is taken out as a loan against the life insurance policy, even though you never have to pay it back, we call it a loan because loan is a debt and debt cannot be taxed. So a lot of the wealthy families are utilizing this tax loophole to accumulate massive tax-free wealth and then later use the money for whatever they need to do, supplementing their income, retirement income, or taking out money to buy a property, whatever that is. And when they pass away, the money, the death benefit, goes to the next generation tax free. So tell me one method that you will really allow to pass down your wealth tax free other than life insurance. It's really hard, right? Whether it's stocks, whether it is whatever assets, real estate, land, a lot of those things, when you are passing it down, there's a capital gains tax, there's an income tax that is triggered. So truly, life insurance is one of the only vehicles that can provide your family and your beneficiary a tax-free wealth that kind of passes down over the generation. And when you talk about generational wealth, people think that it has to be something at a massive scale. Oh, you need to have hundreds of thousands, if not millions of dollars to have a generational wealth, but it's not true. It all starts with you, and you can literally start with $100 a month policy. So when we are educating our clients, we tell them, hey, this is how a lot of the wealthy clients are utilizing it, but we can scale it down that fits your needs. And that's kind of where this comes in. And IUL is a very flexible plan. It can be overfunded for retirement, or some clients just want to have a permanent coverage that is affordable and that builds cash value and something that never runs out until they pass away. So there's multiple reasons they get it, but we actually serve the client both ways. We offer some of the most affordable IULs out in the United States, like the Mutual of Omaha IUL Express, Americo Instant Decision IUL. And then if you want to max fund it for retirement purposes, like a tax-free Roth IRA that doesn't have a limit, then you would go with FNG Quantum or FNG Pass Setter, which you can really customize it to do max funding for them. And then investment, you don't risk the gain. So this is important, right? Right now, there's wars. If you look at just the politics, there's so many division going on, so much division around the world. And when the market goes down, when it goes down, let's say 10, 20, 30, 40, 50%, then the clients who are ready to retire that had money in their 401k, IRAs, 403bs, TSPs, and now they can't retire anymore because they lost 30% of their asset. It's not enough for them to sustain their retirement income. Then what happens? They have to wait until how many ever years pass because the market will eventually catch back up. But let's just say client is already 70 years old and they're really ready to be retired this year and the market crashes, then everything gets delayed into the future and it's kind of unknown, right? Whereas if you put it into a fixed indexed investment option, there is a market risk protection where it's a 0% floor. No matter what happens to the market, your money is safe wherever it has accumulated up to. So that's another peace of mind that you can give to your client. And protection for today, not just for tomorrow. We talk about living benefits. Just 20 years ago, there really wasn't any products with living benefits. So you had to die for your family to receive any money. But what if you get sick with heart attack, stroke, and cancer, things like that, and you're not dead, but you can't work and you cannot contribute income to your family, now you are kind of not making income but still alive, and there's medical bills, there's all the bills due, and now the other family members have to come up with the income to make up for that. And so when a client passes away, the financial really, the pressure is on the funerals and things like that, and the income that is no longer coming in. But when a client is not dead, but experiences critical, chronic, or terminal illness, and they are disabled or whatever, then now they can't contribute to the income and they still are at the home that is needing to be actually provided with services and things like that. So when it comes to living benefits, this is the way I explain to my clients. I say, John and Mary, um, the thing about living benefits is that a lot of the companies still don't offer this. So when you look at companies like Primerica, New York Life, a lot of these companies don't come with living benefits for free. And so what happens is if you have a policy like that with them, then you have to die to get the money, or you don't get any money because you outlive the policy. Whereas our policy comes with living benefits. So if you had a heart attack, stroke, cancer, you have access up to 80% of the death benefit, and you can use that money to utilize for medical bills, pay off your home, or whatever your family needs. So if you were to pay an exact same $200 a month policy, which one will be better fit for you? And I want to make it like it's a no-brainer, right? It makes complete sense. So that's where our products are going to be superior than a lot of the products out there. And you should have the confidence as an agent and as a broker. So let's talk about it. When it comes to ensuring your family's future, right? That's very important. And one thing that is guaranteed in life is that we're all going to die at some point. We don't know when is the time, only God knows. So we have people who are dying at 30 years old of a heart attack, and we have people who are living until 100 years old healthy. So we don't know the timeline. So giving them a permanent coverage, you just kind of eliminate the chance of not able to get the money paid out to the family and leave a legacy. And choosing a plan and coverage. So we help the clients depending on their budget, their health, their mortgage, or whatever that they're looking for. We are giving them the solution. And children, we can overfund an IUL or let's just say infinite banking whole life policy for family education, lifestyle, and future planning. And you can enhance your policy with the critical illness, accidental death, disability coverage as well with our coverage. And high protection at premiums designed to fit your budget. So that's another thing. I don't believe in one product fits all. When you go to a company like Primerica, they say, oh, term is the best. Buy a cheap term and invest the difference, hoping that by the time you retire, you have enough money saved up and accumulated that you don't need the term. That's the mindset, right? And when you go to companies who only offer IULs, they say, oh, IULs are best. Whole life's bad, term's bad. And then when you go to a company that primarily uses infinite banking only, they say IULs are bad and terms bad. But it's not true because why there are so many products? Because people need different products in different stages of their life. So for me, if a client comes to me and says, Sean, I want to have the most amount of coverage for the littlest premium just because right now I have three children, I have a wife, and if I died, my wife will not be able to keep this home. So I just want something affordable since our budget's kind of tight. Then I'm not going to push a $500,000 a month premium. I'm going to try to give them a $100 a month premium that covers them for half a million, $1 million, or whatever they need. If a client comes to me and says, Sean, I want something that is affordable. It can be a little higher than a term, but I want something that doesn't have a deadline. I want something that covers me for the rest of my life, but still needs to be affordable. Then I might put them into a $200 a month IUL that still will give them that lifetime coverage, living benefits, cash value, but not just focusing on the cash value, but the affordability. Then client comes and says, Sean, I want to use my money to pay down my debt. I would like to get out of debt as soon as possible because I have 5 credit cards that is maxed out. I have a student loan. I have a mortgage to pay. I have a car loan. I have a medical debt. I would like to get out of debt. Or if the client says, hey, I want to create my own family bank so I can use that money to purchase things and really redirect the money and make my money be used the best way possible, but I need an access to the money right away. Then I might put them into an infinite banking or life policy. So don't limit yourself as an agent that only sells one type of product. To me, that's not really the best way to serve your clients. And to me, I want to find the best products tailor fit to the client's needs and wants. And if they have a high hopes, hey, Sean, I would love to get $1 million IUL for $50 a month. I'll be very upfront with them. John and Mary, that will not be possible. But this is what I can do. I'm going to show you this plan, this plan. One is going to be more in your budget, but the cover is going to look like this. The other one, you have to put more money, but you're going to get this type of benefits. Does that make sense? So be flexible, be an agent that can cover the clients of all different lifestyles, goals, and different stages of life. Symmetry Financial Group. And this is something that I'm very proud of. I'm not an agent who has to say, let's just say I'm a State Farm agent and the client wanted some car insurance and then they want to look at life insurance and client gets declined. And you have to say, I'm sorry, John and Mary, I can't help you. We don't have to do that, right? We have 50 plus insurance carriers that you can write business with and cover the clients with. So if option A didn't work with Mutual of Omaha because of some of the things in their medical record, then we might go with America, we might go with Transamerica, we might go with United Home Life, American Amicable, but we have so many different options based on their budget and their health. So if you were a client, just put yourself in the client's shoes. Who would you like to work with? Do you want to work with an agent who only has a limited product and they can only offer one or two products with not much benefits? Or do you want somebody that can compare all the products across the board that are A rated, A plus rated companies and find the best plan for them? So take a pride in that. And strategic financial partnership. When it comes to our carriers, a lot of these companies are 100 plus years old. Some of these companies are like almost 200 years old. So when a client says, "Oh, Sean, I heard a nightmare story that one of the clients were paying for like 10 years and the company just went bankrupt and just disappeared." You might have heard that before. Or the company got sold and this and that and I lost my policy. So I am the agent. I'm a licensed professional that was appointed by the state to service the client with the best plan possible. So let's say I wrote a policy with Mutual of Omaha, or I wrote a policy with Fidelity and Guarantee. You know what a good agent is? And this is a very big misconception, and I want to tell the agents, finding the clients the cheapest price is not the best agent. Let me tell you why. Cheapest sometimes means that you have them go through blood work, urine work, do the attending physician statements, and they find something in the medical record and client gets denied. Now the blood work result, the medical information, all is recorded in their MIB, and every time they apply with another insurance company, they'll get a red flag and they will probably get declined or get a very unfavorable rate. That's not doing a client a service. I would rather give a client a coverage that they can qualify. If they don't get qualified and get approved, does really $50 a month matter if the client does not qualify for the plan? If a client looks at $1 million home, but they don't have any money to put down or they can't afford it, it does it matter? No, it doesn't, right? So our job as a broker is to find the program that the client actually qualifies. Because a good agent is somebody that serviced the client and got a good program in place today. And a year from now, when a client calls about a question, or you're going to call them to do an annual policy review to just go over all the benefits and features they got a year ago, that is a good agent. But if you're an agent who is so focused on just the cheapest prices and all that stuff, and two things happen. One, client needs to wait months to get qualified, and there's a chance that client gets denied after a month or two, right? As an agent, you're a brand new agent. A lot of agents who come here, they don't have a lot of money, right? If you're making so much money, why are you looking for another opportunity? And if you're in this company and you're not making money for a month or two because you did a fully underwritten trying to save client a $5 monthly premium, you're most likely not going to be here in a year. So that doesn't make you a good client. The good agent is somebody that gives a client that is affordable, that the client can qualify and get them approved, and they're gonna be here to service them throughout their lifetime. Okay, so always remember that we have variety of products, and if there's two products, one is a fully underwritten product and it's going to save client $20 a month, but there's a chance the client might not qualify or they come back with a counteroffer, and there's a non-medical product that the client can find out in 15 minutes if they can qualify, no needles to be stuck in their arms, no blood work and urine work, and they can get a coverage from day one, then as an agent, I will choose the instant decision coverage so client has a peace of mind right away. Because throughout the process, if the client does the blood or urine work and dies in the middle of the process and they can't get a payout because the client gets declined, what's the purpose of our coverage? So when you're choosing the products, don't just think about what's the cheapest price. Think about based on their health, based on the a budget that they have, which program they can actually qualify. That should be your main focus as an agent. And let's talk about comparison. So the world or the society tells you, hey, 401k, 403 IRA, that's the best. That's the best because that's what everybody does. But do you know what I learned in my life? If everybody's doing it, it's usually not the best thing. If everybody's doing it, it's not the best thing. The best thing that are kind of not well known to the general public and used by the elites or a lot of the high income earners, that's the things that you should look at. That's my opinion, right? So when it comes to 401k and 403b, it's not bad. IRA tradition, the Roth IRA, it is better than anything else that people are not doing with their income. If you are not doing it, that's always the worst thing. So when it comes to a 401k, I still believe that it helps clients with retirement. But there's a lot of things that clients are really misinformed with. So let's talk about that. 401k, IRA, 403b, there is a portion of the paycheck before taxes that gets matched by the employer, and a certain percentage goes into a 401k account, right? A lot of the IRAs and Roth IRA, yeah, they're not matching. That's just something that you're doing, individual retirement account. But I'm just talking about 401k. So if the employer is matching for you, I'm all about it because it's free money, right? If I put in 300 a month from my paycheck pre-tax and the company matches $300, that's free $300. That's worth it to me. But clients who are putting, even though they match only 3%, but they're 10, 15% of their paycheck into that, I don't think that's the best method. Why? Because it's tax deferred and it sounds good, but when you later want to retire, the money's now 500, $1 million, and now the state wants to take a portion of that. And when you get taxed 15, 20, 35% on $1 million, that is not $1 million retirement account. Uncle Sam owns 15, 20, 35% of that. Okay. So when you have a $350 a month, let's just say that was your contribution into a retirement account that's tax deferred for 10 years. So total contribution was 42,000 and interest earned was 20,000. So the total cash amount inside of the 401k or the retirement account is $62,000. But you cannot touch the money until what age? Because it's a qualified plan. When can you touch the money? Tax free. And not tax free, I'm sorry, penalty free. 59 and a half. So it's your money, supposedly, right? It's your retirement money, but without penalty, you cannot withdraw the money. So technically, you are being held hostage until 59 and a half so that don't get penalized. So if you take a look at the thank God we don't have a state, right? But California and a lot of states have a state tax. And then federal penalty is 10% if you want to withdraw the money before 59 and a half. So is that really your money, right? And then states that have a state penalty, that's another 2.5. So taxes and fees and all that thing is due. Then now your actual cash in your hands will be 31,000 if you want to walk away. And let's talk about that. If you wanted to overfund like an IUL or overfund like an infinite banking whole life policy, when you pay $350 a month, you get an instant estate of $500,000 of death benefit and living benefits. So if you had a critical illness, if you had a chronic illness, which is like a long-term care, terminal illness, or death, then those money will get paid out tax-free for your family. And while you're doing that, portion of the monthly premium that you pay in goes into a cash value account and it grows anywhere from 6 to 8% a year, tax-free. So when you want to access that money, you can take out up to 90% of the money in there at any time, tax-free. The only thing I give the clients a heads up. Do you remember I said not all products fit every client? If a client says, Sean, I want to kind of create a rich man's Roth IRA. I want to use an IUL. I want to put in about 15 to 20% of my income into a tax-free account, and I want to retire by 50, and I want to receive an income of $150,000 for the rest of my life. And I don't want to touch my money for the next 20 years. Then I would put them into a max funded IUL. But if a client says, hey, Sean, I want to buy a home in the next year or so, but I want to put it into an infinite banking policy so that I can accumulate money and take out the money tax free in the near future. And they need liquidity right away, immediate liquidity in the next 60 days to a few years. Then I'm not going to put them into an IUL because IUL in the first 5 years, there's not a lot of liquidity. I will put them into a whole life, infinite banking, participating whole life that you have instant access after the 30 days, up to 90%. So we can pick and choose what program is best fit for them. And let's talk about the historical return over the years. And it's really scary right now because every time there's an announcement from the White House or there's a news that break out, there is stocks going up, stocks going down, up and down, and nobody can really predict it, right? Some people say it's going to skyrocket in the near future. Some people say it's going to go down like back in the days, like 2007 and 8. And nobody knows really. Nobody can see the future. So when we look at 100,000 that was put in at the same time back in 1997, and if you take a look at the orange, which is, let's just say like an S&P 500 or NASDAQ, right? And if you look at the 100,000, 1997 to 2000, only in just 3 years, it gained 51%. It went to $151,000. It's like, hooray, this is amazing, right? Do you remember the dot-com bubble? That sounds great, but in the next 2 years, it went down like 60%. So the money went down to like 90 something thousand dollars. So you have less money than when you started back in 1997. And the market is going to eventually go up, right? Because when it comes down, it goes up. So in the next 5 years, it goes back up to $150,000. That's great. It finally got back to where it was like 7 years ago. But then the market crashes again in 2008 and 9. And take a look at this. Now it's at like 105,000. And it goes back up. So it's up and down, up and down. It looks like a heart monitor. Do you know when people say they have anxiety with the market? It's because, they don't know. It could go either way. It's a gamble in a way, right? But look at the blue. Putting into like an overfunded IUL and it could be an annuity. It could be a fixed index annuity. And the money is growing slower, but in 2000, the count that's 128,000. So it's less than what the S&P would have done in the stock market in a 401k or whatever. But when the market crashes in the 2000 to 2002, our clients didn't lose any money. It stayed at $128,000 for those 2 years. And when the market goes back up, then it gains. So in 2007, even though it didn't grow as fast, it's sitting at a higher amount of 170,000 compared to the $154,000 in 2007. And when the market went down in the 2009, our client money stayed the same at 170,000. The money in the stock market actually went down to about $108,000. So there's a difference of about $60,000 of difference in asset. And I'm not saying the stock market investment is bad in any ways, but also I don't want to put all my eggs in one basket and put all the money into a risky product. So when it comes to the life and health agents, you have the ability to offer clients a non-risky fixed index annuity or fixed index IUL. And that's the beauty of this business is that you are never going to get a call and say, hey, Sean, why did I lose $20,000 yesterday? You're not going to get that call. And that's the peace of mind as an agent when you're offering these products. And it's a peace of mind for the clients who put their hard-earned money into this. So let's talk about it. If you are this client, which one do you like better? Do you like the orange or do you like the blue? Right? Call me conservative. I would rather have the blue, especially my foundation investment. I would like to in the blue. If I want to put some money that I don't care if I lose and it's more of a like a risky investment, then you might do that, but you don't want to put majority of your investment into that. So that's where we educate the client. Hey, why don't you diversify a little bit? I know you are contributing to match the 401k that your employer is matching for you, but the rest of it, the 7% that you've been overfunding, why don't you put it into a tax-free vehicle so later you don't have to worry about Uncle Sam taxing your money, and then you can never lose money based on the market fluctuation. And this will also come with an instant estate of $1 million. And how does your money work? Let's talk about $100 that you put it into your checking account today. You use Bank of America, Wells Fargo, Chase. There's so many banks, right? US
Drake
Bank.
Stratton.
And Drake, I think you're
I
unmuted.
had a written
Talk
a
to me.
Mutual of Omaha policy on it.
Okay. So when it comes to $100 goes into the bank account, you're gonna get $100 and some interest. On a typical savings account nationwide, do you know what the average is? It's like 0.4%. So every $100 you put in, you get like less than 4 cents. Now, if you're to put the same $100 a month into a life insurance like an IUL, then you get an instant estate that protects your family and you get living benefits in case something happens. Plus, you get the cash value. And I'm gonna tell you, people are gonna say, "Oh, but you don't get the $100 right away back." Yes, it is true. This is more for a long term over time. This is not a get rich quick type of product. If a client is looking for that, I tell you this is not it. Maybe you should put all your money into a Bitcoin account. This is not it. This is for clients who want to protect their assets. They want to protect their family, but still has that tax-free money that is growing. And if it's properly funded, then it will outperform any savings account interest that they're getting. And eventually, with the compound interest where it's 6 to 8%, it's gonna definitely outperform even the high yield savings account of 3 to 4%. It's gonna have a lot more money tax free in there. And every time you take out money, you don't have to tell Uncle Sam about it. And that's another big benefit. And so to me, if you have $100 a month, where should the families put their money into? To me, it's the life insurance every time. The $100 a month into a bank account, you save some money, but you die or you get sick. Does Bank of America pay your bills? Does Bank of America pay you 100,000, 200,000 for cancer? No, it does not. You only have maybe a few $1,000s, and that's not enough to cover any of your medical expense. Do you know why they say the wealth gap is getting bigger and bigger, and there's not much of a middle class? It's going to be poor and it's going to be wealth. Why? Because the financial vehicles that the people put their money into, that's going to drastically change how your money works for you while you're sleeping. So if a person that has money, they put it into products that give them more money while they're sleeping. And that's why the wealth is growing exponentially, right? And then there's a way that people put it into just under the mattress or put it into a checking account. I'm not saying that's bad. My parents' generation and above, like coming out of a Korean War, put it under the mattress, put it into that's very common because people are scared. But also at the same time, that $100 that I saved underneath the mattress 10 years ago, can it buy the same amount of stuff today? No, right? I saw an ad. I saw it on the Facebook, I think. I saw there was an ad on a newspaper saying that the home is for $28,000. You can buy a four-bedroom, two-bath home with three garages for $28,000. You can barely buy a car nowadays with 28,000. So if you put your money into something that is not compounding and it's not accumulating, then you're losing money. Even though the money that shows in your bank account shows the same, it's the same $100, but it's actually not the same $100 because of inflation and cost of living that goes up every year. So Any investment vehicle, if you're not getting 3% or more in interest, you are losing money. And that's the financial education a lot of the families don't have. And let's talk about some of the living benefits. And we listed all the different types of living benefits, but the most typical one is like the terminal illness, chronic illness, critical illness. And I want you to be an agent that can explain these benefits clearly, not just surface level. Oh, it comes with terminal chronic and chronic critical illness. Clients are not agents. They don't know all the details of the benefits. If you do that, you're not building the value of the product that you're offering. So if I'm an agent, if I'm a pretty new agent, I say, "Oh, John and Mary, what's great about this IUL is that you don't have to die. You can actually get the living benefit. So if you have a terminal, chronic, or critical illness, then you can access up to 70, 80% of the death benefit." Okay, great. Okay, here's the options. To me, there's not much value built. What I would do is I will go individually with the benefits and what it comes with and how this can help the family in the future and give them some examples of how this was able to help the families with a third party story or a family that didn't get this in place and now their family's suffering. You want to give them a third party story that actually resonates with them and something that they can picture for their family. So I say, and John and Mary, one thing I'm so happy to offer our clients is called living benefits. Even just 20 years ago, the life insurance and mortgage protection, you had to die for your family to get anything. But what we realize is that a lot of families don't die just next day. They might get cancer, they might have a heart attack and stroke. And what's crazy is this is a statistics that a lot of people don't know. They call it the big three: heart attack, stroke, and cancer. That's the most common, right? Critical illnesses in the world. And did you know that 92% of the people who experience the big three, one of the big three, 92% of the people actually survive their first illness or episode. So if you survive the heart attack, your old style of life insurance will not pay out any money. But our plan will pay up to 80% of the death benefit while you're alive, and you can use that money for you and your family to pay off your home, to pay for your medical bills, or take your family on vacation, whatever that you need to do. And then now I'm going to go over individual benefits. So terminal illness, John and Mary, this is pretty simple, right? If you have some states like 12 to 24 months, so let's just say 12 months to be safe. You know, John and Mary, if you went to the doctor and doctor said, "I'm sorry, John, you have a terminal cancer if you have 12 months less to live," then do you know that our company will pay up to 100% of the death benefit to you while you're alive? Chronic illness. Have you heard of long-term care before? Long-term care means that if the client cannot perform two out of six activities of daily living, such as bathing, continence, dressing, eating, toileting, transferring, things like that, and you need to go to a nursing home or somebody needs to come to your house to take care of you, then you can actually receive a monthly income anywhere from 5K to 10K tax free. Now, what about this benefit? Did you know that for seniors, the most expensive cost is the long-term care? People are needing long-term care more than ever because people are living longer than ever. And they might be alive, but does that mean they're active and they can do everything? No. They could be living, but they can still be in a long-term care situation, chronic illness situation. So if now you have to go to a nursing home, but it costs 10,000 a month and you don't have that income, you only make 3,000 a month of your retirement income, how can you afford that long-term care? So if we give you a program that comes with this benefits, do you see why these benefits are going to really help your family if you need this? And critical illness. This is actually my favorite benefit. It covers like the big three, like heart attack, stroke, cancer, non-terminal cancer, ALS, which is Lou Gehrig's disease, right? End-stage renal failure, major organ transplant, things like that, we'll be able to give you up to 80% of the death benefit while you're alive. So I want to share this quick story with you. Benny, he's a client of mine. Back in 2018, he purchased a brand new home, $500,000 home. And when he bought the home, we sent out a lead and he filled it out looking for mortgage protection. So I went to his home and I covered his mortgage of 429,000, less than 200 a month. And he was perfectly healthy, no health issues. One blood pressure pill, but very, very maintenance. He's in his late 40s. He has a wife who's a nurse and two children. 2 years, I didn't hear from him because most clients call me when there's something happening, right, where they need service. And I get a call 2 years later, and he goes, Sean, I'm in the hospital. I actually have I have a problem. I was taking a shower after the gym and I will start throwing up blood. I was like, oh, I'm so sorry to hear that. And he goes, yeah, I did some testing and I have stage 4 lung cancer and stage 2 brain cancer. And he's just like so devastated. But he remembered when I met with him at the home talking about living benefits and cancer benefits. So he called me from the hospital. So next day I go to his home. Wife is crying in the corner. He sends up the two children and he goes, Sean, like, if I pass away, can you make sure that my family's okay and this house is paid off? And you know what? He had 5% chance that the doctor says he has a chance to live. And he's still living up to this date. And the next like 14 days from when we got the claim form done and submitted, you got a check of $400,000. I think it was 405. And he was able to use that money to pay off his home. He just got laid off. All these things were happening. And what a blessing. Completely healthy 2 years ago and got a policy in place. And now he wasn't as financially stressed because he was able to pay off his home for his family. And probably because of the less stress that he had financially, he could focus on getting better health wise. And so, John and Mary, do you see why our clients really love these benefits? Do you see a benefit for your family if you had these benefit? What am I doing? I'm tying it down. There's an emotional connection to the product now. They're thinking about their family. And when you see an agent who is a average agent who makes, let's say, 50K a year, and there's an agent who's making 300,000 a year, a lot of the times these are little things like the little stories you share. You're getting that emotion on the table, right? And so to me, these are such a great benefit. So I just showed you two different ways. One is just a very simple way of explaining it. The other way is really going into deep and really drawing that picture and how this is going to protect the family. Which one do you think is going to most likely going to say yes? By this point, if you have some emotion on the table and they can picture their family in the future about this, then the 90% of the work is done. We just have to go and find the best option that is affordable to them. But if you don't have any emotional attachment, if there's no like a client feeling like this is something they need or want, then even if it's $50 a month, they're not going to get it. So build the value, okay, when you're doing the presentation. And I tell them, hey, to me, one thing I love about this is that we protect all different stages of life and all different scenarios. Are you truly prepared should any of these may occur to you? One, premature death. That's the worst case. You passed away unexpectedly, and your family now has to be in a financial bind and they need to figure it out. They need to do GoFundMe. They need to raise money. They need to work a second job, third job. The kids have to go to get a job. Living too long, you live too long, your income runs out, your social security is not enough. You have to go back to work at 80 years old, not by choice, but because you have to, or get sick. If you have a heart attack, stroke, cancer, or you had a stroke and your body's not able to really let you walk around, like all of those things are, do you have a plan that protects you in all different situations. And now this is something that you can add as well. If you show the presentation, I'm not saying that show this on your mortgage protection presentation. I'm saying that for people that you want to potentially offer an opportunity, you can say, hey, by the way, you love these benefits and you want to get a coverage with this plan. I see that you believe in this product. If you can make an extra few $1,000s a month, is that something that you'll be interested in? Would that be helpful to your family? So then now we can give them an example of how they can supplement their income, getting their license and things like that. And this will be also another way for you to build your agency and give them an opportunity. Remember, when I started, I just got my license and I had no plans of building a team because I just had to get out of the hole I was in, just pay my bills. But once you get into this business and you see how it changes people's life, how important these products are, and then you start bringing in people, and it all starts with just sharing the opportunity. And who knows, maybe that was the opportunity they needed so bad because they were in such a bad position and they were just so miserable and getting really sick of whatever they're doing. And you might be the person to share the opportunity that changed their life. So this presentation, and I can share this with you. And this is, I just based it on the IUL commission on some of the lowest commission paying out IUL products. But if you sell like a term and final expense, a lot of them are paying the full 80% or maybe 75. But IUL, because a lot of the cash value goes to straight to the client's cash value, so the commission might be a little less than a typical term policy. So I will let you know that this is a great way for you to offer this. And let me just go ahead and save this, download this, and I'll share it on the chat. So if you want to use this in the future, you can. Here you go. Computer. Let's go ahead and see if it was downloaded here. Yeah, there you go. Let me answer a couple of questions here. I need a story shown. Can your client, after recovering from cancer, get another coverage? No, Nora. That unfortunately, once they have like a cancer and things like that, the minimum look back is 5 years of cleared of cancer. But if it was a really like a metastatic cancer, like my client had a lung cancer and brain cancer, those are considered because it could come back in the future, right? So it's really hard to get them a coverage. The only thing you can get them is probably like a final expense that has like a 2 to 3, 4 year look back of cancer. Then after they survive the cancer and be cleared of no treatments or no medication for cancer, and they're clear for 3 years, then we can definitely start looking at that smaller coverage. But it's not something that we can give them right away. Okay. Any questions? Let's open it up. And then it's a little longer than usual, but I think that it was a good presentation for you to look at. Any questions?
Yes, I have a question, Sean.
Mm-hmm.
If we have a client who calls us up and says, "Hey, something happened to somebody," how do we go about getting their policy paid? What can we do for them, or where can we go?
Yeah. So great question. So if you're an agent who wrote the policy and client died or they had like some kind of a heart attack or stroke or like let's just say they had a living benefits, then as an agent, what I will do is I'll notify the insurance company that they're covered under. They have a claims department. You call them up and say, hey, the policy number this client passed away. And I would like to let you guys know we're going to go ahead and provide the death certificate and some of the information. Can you please go ahead and mail the clients the claim form? Then they're going to mail the client the claim form. And once they receive it, sign and all fill out their info with the death certificate, they mail it back to them and they review the policy, the documents. So you want to just notify the insurance company and make sure you can request that claim form so that they receive it so that they can fill it out and send it back with the death certificate. That's the
Is there any
process.
way to get it done to expedite it, get it done paid within 7 to 10 days?
It's quite hard. Okay, so I'll put it this way. the biggest thing is they need a proof, right? They need a death certificate. So death certificate typically takes more than 7 days, just because if you have a funeral home, you need to go to funeral home or a coroner's office. Like it needs usually about 7 to 14 days. So as long as you can get that document, then the processing can be a lot faster, especially if the client had the policy for more than 2 years. Inside the 2 years, it's considered a contestability, but as long as the client didn't lie on the application, then they should pay out. But if the policy was active for more than 2 years, then the payout will be a lot faster because as they can't really do a full investigation. They have to pay out because they passed the 2 year contestability period for any life insurance policy.
What about a living benefit?
Yeah, same thing. You're gonna
No,
call them, notify.
there's no death certificate. So how long before something can get paid?
Then you have a claim form that needs to be mailed to the client, but then it's going to have a asking for an attending physician statement about that. The let's just say if it's cancer, then they want the information about what stage cancer, what type of cancer, the pathology of the cancer, or if it's a heart attack, then they want to see a document saying that the client had a heart attack and have it in the attending physician statement to supplement that. Okay.
So what kind of time frame are we thinking? Like 30 days, we can get them paid, 60 days?
It all depends, Charles, because again, if it was more than 2 years, most likely it can be done as early as 7 days. That would be like the shortest period of time. Unless you write like a Transamerica policy. Transamerica, if it's over 2 years, you can get up to $25,000 of it upfront, as soon as 48 hours if you sell like a FE Express. But yeah, that is available. But most carriers is gonna take the shortest time frame is 7 to 14 days. And if you provide the documents in time, it's gonna take 7 to 14 days from there.
What about the living benefits? Is that 30 days
Yeah,
or?
same thing. Yeah, they have to still review the attending physician statement to make sure it's true. Yeah, so I can't give you a certain answer of how many days it will take because it's all
Well,
case
no,
by case.
I just want to be able to tell the client, within 30 days or within 60 days, we'll have this all taken care of. We can get you money within 30 days or whatever. Usually it takes about 30 days.
Yeah, so if you wanted to, yeah, it could take about 30 days. You can say that, but I wouldn't say an exact number because, you don't want to tell the client information that is not true. Okay. All right. Any other questions? And to me, these are great, especially if the presentation I showed you, it's different from mortgage protection. This will be a great one for maybe like a warm market or somebody that you want to kind of talk about how important these benefits are and why everybody should have a policy like this. It's just that educational thing. And by the time you're done with the presentation, if you did a decent job, then most people will want this. Okay. And this will be a presentation that could kind of help you to not only sell like the term policies, but something that can help you sell bigger type of advanced products. Go ahead, Joseph.
There's training videos on all these, it's like specific products on HQ, right?
Yeah,
Okay, cool. I just want to
yeah.
make sure
So
I
on
can go
your
there as a resource.
HQ, yeah, on the HQ, when you go to carriers and products and click carriers, it's gonna have their key products and like their agent guides and brochures
Okay,
and things like that.
okay, just wanted to make sure. Thank you.
Yeah, yeah, you're welcome. All right. And let's see, could you possibly share this presentation on Gaze Line 2? Yeah, I can share this on Engage Line 2, Anna. I'll definitely do that. Okay. So what we're gonna do is, if there's no more question, we're gonna go ahead and wrap this up, and we're gonna stop the recording and go into some case prepping.